General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.
Good afternoon and welcome back to this week's Global Alpha podcast with myself and Finn again for another week to take us through the crypto markets.
Hey everyone, how's it going? Good to be here for the second time around.
Absolutely. So we had the heat map last week. We can see for the first time in a while a fair bit of neutral return there where there's not any real color. Nvidia, Apple, some of those big names that had reporting recently. Meta was one that also reported last week. You can see market didn't really like the report and guidance that they had given, so we saw a bit of a retracement of that name. Google was one that did report reasonably well, but we can see it's sort of sat flat there on the market. So as you can see, it's a bit of a mixed outcome from last week. So I think that volatility definitely has increased, but we are seeing the market sort of move in an overall upward direction.
Is this an outcome of, expectations being too high and then kind of pulling back? Or what do you think has kind of caused this bit of neutral price action?
I've been discussing it with, clients and stuff over the last period. There's two real reasons, as you said, with the earnings that we've had up until this point this year. Last period, I'm pretty sure 85% of companies beat earning expectations, and I believe we're on track for this period as well.
Yep.
In that, you kind of get a lot of hype around what people think what the earnings are going to actually be. So I think it's a bit of, people being disappointed by those results or the results falling short of what they're expecting, but also the performance up until now. If people are invested in these stocks for, say, the last 6 months, they've got so much profit, so much, they've added so much value to the investment. Really, they have a lot of, room to trim these positions or sell them out in heavy profit. So I think that's sort of hampering the market at this top end here. So few earnings coming up this week that we're really big on. You can see, Palantir, AMD, Qualcomm, all stocks that we've had in our watch list or Global Alpha recommendations for some time now. So very important earnings for current investors with MPC this week. Fairly confident with Palantir, AMD, and Qualcomm that we're going to see quite a robust earnings announced. Spotify and Uber, I'm a little bit on the sidelines for, just to wait to see. There have been some really exciting announcements from Uber. I'm not sure if you've seen, Finn. They're looking to partner with Nvidia and Stellantis to actually build their own self-driving cars. So circumventing, who I was assuming it'd be Waymo or Tesla or something like that, but they've actually decided to partner with Stellantis. So could be actually good news for Uber, but bad news for some other stocks in the market. But yeah, definitely waiting and seeing. And Novo Nordisk, so not sure if you're familiar with them. They were one of the companies that made those weight loss drugs like Ozempic earlier were really well hyped earlier in the year. Kennedy came in, changed sort of the rules and regulations around some of the pharma space, and it was one of the worst recipients of those changes. And we've seen quite a bit of a deterioration in the share price over, say, a 12-month period compared to how it had been performing for the previous 12 months. However, we did see last week Eli Lilly reported quite robustly, very similar business to Novo Nordisk. They even do a competitive drug like their version of Ozempic. So
is that Mounjaro that they do?
I'm not sure. Yes, Mounjaro.
Yeah, right. Yeah.
Zepbound is the other one.
Yeah, okay.
Diabetes and weight loss.
And look, just a question on the Uber development. So is this a data play? Are they capturing data on vehicles for autonomous driving, or are they actually doing a Tesla where they're looking to actually put autonomous vehicles on the market?
So as far as I'm aware, it is to be a service, to build their service out. So the Uber service will not have drivers. The cars will be owned and operated by Uber, similar to a taxi. but there is no human being driving the vehicle. So it'll be for
Interesting.
them, operated by them. I don't think, as far as I'm aware, that they'll be actually selling those to, say, Finn, if Finn wanted to have an automatically driven car. I don't
Sure.
think it'd be available for you at this point in time. But obviously, down the line, it could be something that they explore. So I think it is a pretty exciting partnership between those three sort of key players in each of their different spaces.
Interesting. Interesting. And look, coming back to Palantir as well,
Mm-hmm.
what makes you so excited about this business's earnings? Obviously, they're a fairly opaque business, right? We don't really know a lot about what's going on the inside. Obviously, a lot of government contracts. But what has you excited for this round of earnings?
You've seen them win contracts through the year. This year, it wasn't as if there was one big contract and we've been sitting on that and saying, oh, this is the be all and end all of Palantir. It's constantly winning contracts. So I'm very confident that they'll continue that growth projection that they've been guiding for, I think, the last 3 to 4 years.
Yep.
With them, of course, they're very expensive in relation to sort of revenue and the actual share price itself. But in saying that, the defense space and the sort of the tech space being covered by that company, it's just a really good area to be in that I think is, going to continue to be demanded. And there was I think it was $10 billion contract announced with the Defence Force early this year. It's just enough in itself to sort of bolster the position of Palantir. And again, being a company that I've covered for a period of time and been a big fan of. So United Health was a trade recommendation that we put out. The stock did beat expectations on its earnings, but there is the medical space being hampered by, Kennedy and all those changes that could come into play. United Health has seemed to be the one that's getting the worst sentiment from investors because it's healthcare insurance. So, if the space is affected overall, it's going to be one of the worst recipients. So it's come off a little bit from when we put the recommendation off, but I believe that we will be able to hold through on this stock because, the quality's still there. Medical insurance is not going anywhere. So still confident on that. Microsoft posted pretty strong results. Revenue went up about 18% to $77 billion. And then there is your cloud segment grew 40%. The stock did dip a little bit off the back of that, but I'm fairly confident that the market will return to being very positive on Microsoft. Meta posted a really good earnings as well, but the market didn't like it whatsoever. So we didn't see any upside since that earning was posted. Even though, 26% growth year on year. The investors seem to be spooked, though. There was a $16 billion one-time tax charge. So we saw the share price come off about 11%. So not good for Meta investors, but I think long-term, it's a one-time tax event. It should, dissipate quite quickly. Amazon were a very strong beat last week. They propelled by up to 10%. AWS really the main driver of that in the growth in that space. And Apple exceeded its earnings and revenue expectations and has given really strong guidance for the coming period. I think, Christmas, iPhone 17s and gifts and things like that. So they've given some really robust numbers on the iPhone 17 sales. Look, Apple is not my favorite of these, high-performance tech stocks. I think, you're sort of buying a product that only 50%, a certain number of people like to use, and then you've got, the Android competition that can
And you got Warren selling, right? That's like a major indicator.
That's one of our big indicators.
That's a massive indicator. And look, personally, I'm still on a very old iPhone. I think I'm on like 12 or 13.
Wow.
I don't notice a lot of difference in these new products.
None of that built-in obsolescence where the battery starts to decline as the new phone comes out.
It hasn't happened this time, and
Really?
Look, maybe they should ramp it up because it would help their numbers. But what might be a big reason for this is if I buy a new iPhone, I don't think it's going to be an iPhone. I think it's going to be an Android.
Wow.
They've got really great cameras. I'm moving over to PC in general. because it has, I suppose, compatibility issues. I
Yep.
don't mind the M1 chips, or the M5 chips they're up to now, but there's a lot of compatibility issues because it's just such a vastly different architecture.
Yep.
So I think overall that's my opinion, but I've noticed a lot of people sharing that same opinion.
I did the same as you a couple of years ago. I was on Apple, changed to Android. I'm back on Apple now, but now that I bought a PC computer, I have noticed it's the compatibility across the two devices is not as good as if I was operating a Mac. And on my next phone, I might be in the same position where I would consider a Samsung or something like a competitor that has a little bit more usability as well, where you're not sort of fenced into the Apple ecosystem.
Yeah, exactly. And then
So as we mentioned, the big one for us tonight, Palantir. Another another name that I am interested in, but we don't have it open as a recommendation, Diamondback Energy as an oil play. So it'll just be interesting to see how, despite the oil price, how Diamondback's been doing with their fracking operations. Moving on to Tuesday, some more of the big tech names. You can see Spotify, Shopify, AMD, Uber. Pfizer's actually in there as well, and McDonald's. So big night there. The main ones we're going to be looking at, though, we mentioned before, AMD and Uber, AMD, Uber, and Spotify. DoorDash and Qualcomm on Wednesday are ones that we'll be watching. DoorDash obviously was a rec of ours earlier in the year. And, they had some really key acquisitions, as in when they bought Deliveroo in the UK. So it'll be really good to see what that expansion meant for revenue in sort of that 3-month period since the acquisition was announced and went through.
interesting.
So I'll be really keen to see how they did. And I'm not sure if you're aware, in the States and other parts of the world, DoorDash is actually bigger than Uber Eats. So
Right. I've had some
yeah,
terrible experiences on DoorDash Australia, I'm not going to lie. I think the two times I first used it, it never arrived, and
really,
I think the driver must have taken it. So they probably haven't invested much energy into Australian market because it's so saturated by Uber.
yeah.
Hungry Panda is a great competitor here. Love Hungry Panda.
Hmm.
For those kind of late night Asian eats. But yeah, no, it's interesting. It's interesting. I never knew DoorDash was actually up there in terms of the global market.
Yeah, so in America, pretty much Uber Eats isn't really a thing in most states. DoorDash
Wow.
is the thing that,
Yeah,
people
right.
are regularly ordering through, which surprised me actually. But it was, Uber must have moved a lot quicker on the Aussie market with,
Yeah,
Uber Eats, and Deliveroo was really their only main competitor, I think, back then, and maybe Menulog. So they did, here we think of Uber Eats, but in the States, DoorDash is the one. So it'll be really
interesting.
interesting to see that. And then moving towards the end of the week, really, as you mentioned before, we like to see what Mr. Warren Buffett's up to. So Berkshire Hathaway, of course, will be just having a quick look at that to see what's been happening over there and how they've been performing.
Yeah, fantastic. I'm just gonna have to switch over here, so bear
No
with me for
problem.
1 second. Yeah, so look, wanted to take a bit of a moment here for anyone kind of interested in crypto, to talk about something fairly significant that's going on with Bitcoin. So Bitcoin, since its inception, has been driven by market cycles, at least in terms of price action. And where that's marked by is in halvings. So without getting into too much detail about the protocol and how it works, the block reward for Bitcoin miners every 4 years, roughly, there is actually a halving event where that reward is halved. And this generally marks a market cycle, right? So we'll generally have an accumulation cycle, a boom cycle, and a bust, and that comes again into accumulation. And this happens every 4 years. But something's happened a bit differently this time around. Obviously, we've had a lot of institutions get involved in Bitcoin, and we're getting to a stage where it's operating as a fairly mature asset. So zooming back to, let's say, 2017, we saw a run up from 1,300 to 17,500, which is nearly a 2,000% gain. And that is in the kind of run up period. What's interesting is this time we've only seen about a 30% gain from the actual beginning of the halving, and which is supposed to be the boom cycle. And what kind of we're leading into next is we're heading into this bust cycle. And that kind of begs the question, is this the end of the Bitcoin 4-year cycle? Is this time different? And I think whenever you find yourself asking, is this time different? You kind of have to question yourself, right? Because often it's not. And so it begs the question as to what's going to happen when we enter the bust cycle. Is it going to really bust? But yeah, it's interesting.
So the reason that you're saying this is from when the halving happens, generally speaking, you'd see a market rally on Bitcoin following on from the halving. But in this one, it's been too flat, that price action.
That's exactly right. We haven't seen flat price action like this from the halving ever.
Before. Okay.
Look, I think over time you should expect these returns to diminish over time. But this it's very different. It's very different.
Yeah.
We haven't seen something like this before, and even the previous cycle, we saw a lot less of a run up. Only about 630%, which sounds
still pretty decent.
Only about 630%. But yeah, look, I think we should probably expect these cycles to diminish over time, and this is probably part of that. But I think a lot of traders are thinking this time it's different and we haven't had a boom yet, and maybe that's not the reality. But look, maybe it's time to just peel back expectations and get ready for a bit more of a stable, mature market.
So you mentioned before the halvings are a set time frame between the halvings. It's at an interval, or is it?
So this is when it gets a little bit complicated. So Bitcoin doesn't necessarily communicate with any kind of clock, for example, so it doesn't know the time, but it does know how many blocks have occurred. So the reason I say roughly 4 years there's a halving is because on average a block occurs within a specific period of time. So we can assume that every 4 years there will be a halving event. But in reality, it's just a specific amount of blocks that have been mined within that time. So that's where the 4-year cycle kind of comes in.
And the reason for the halving, like with shares, there's been many times with some of these big US tech stocks where they do share splits, where they break one of the shares into multiple smaller shares, really to increase liquidity, allow smaller investors to buy. You can't buy half a share on the share market, but you can buy, once you split the stock into 5 units, someone would be able to buy one share. So. In that case, most of the time it is really done to boost the liquidity. Is that the same for Bitcoin?
It's very different. So it's not as though the supply of Bitcoin would double, increasing the amount of shares or Bitcoin in existence. There's always going to be 21 million Bitcoins, but not all of them have been mined yet. And so how they go about kind of keeping 21 million Bitcoins in existence while consistently being able to mine is the reward for mining Bitcoin halves every so blocks that have been mined, which is about a 4-year cycle. So it's more so the reward for going and mining Bitcoin is halved as opposed to the supply is double. There's always going to be 21 million Bitcoin.
All right. So it's not as if the Bitcoin was split into two and there's a new attributed pricing for those two. No, even though the number of Bitcoins hasn't changed, it's just the Bitcoin's been broken up.
That's right. So it's just the reward for mining Bitcoin halves. And that's a good kind of call, actually, because I think there's a lot of misconception around what the halving is and what that means. So it's really good to clear that up.
Yeah, I had a few people that were in crypto actually explain it to me, very similar to a share split, but from what you just explained, it is actually completely different.
It's completely different, yeah. That's right.
Interesting. So good for you investors out there that don't know. Now we do. Education.
That's right.
From
You don't
Finn.
know, now you know.
Perfect. So your sentiment has changed on Bitcoin, or what are you saying from here? Are you going to be continuing to hold it as an investor?
I'm definitely continuing to hold it. I am lowering my dollar cost average. So I think the best way to invest in Bitcoin, or really any deflationary asset like gold, if we're heading into an inflationary era, we could look at real estate as a similar kind of asset class in this context, is I would recommend to dollar cost average. Obviously that becomes very hard with real estate. because
Yep.
you've got to buy in big chunks. But if we're looking at, say, an REIT fund, the best way to invest in these deflationary assets is by having regular monthly or weekly or quarterly buys. That way, you're not relying on timing the market. It's more about having time in the market. And you can easily kind of have your own financial plan, which is specific to you, to accumulate these assets over time. And that's the way I'm looking at it. So I'd probably be taking back my buy-in and maybe halving that at this period, and just waiting to see how the market reacts to this next kind of era in the cycle.
And one last question. Will this mean anything for some of the other cryptos?
100%. There's a very heavy correlation in Bitcoin and every other crypto asset. So generally it's amplified. So if we see a pull down in Bitcoin, we'll see even more fierce pull down in other assets, other crypto assets. But I'm a kind of glass half full person. So every downturn is an opportunity to buy more. And if you're looking at the right assets, it can really land you in a good position. It's tricky to do in crypto, considering I think it was about 2 million coins were created this year, due to obviously the rise in things like pump.fun. But it's interesting how much volume and liquidity has been pushed into things like meme coins, which I definitely wouldn't advise you buy. But the platforms that issue meme coins actually generate a fee. And we've started to see some interesting revenue being created in crypto through these kind of
Fee farming, is it called?
I suppose it is fee farming. Yeah, I mean you're probably the first to say it, but it's a good.
I heard it on the weekend on YouTube.
Okay.
I'm not sure if you're familiar with CoffeeZilla, but he did a whole hour on online gambling and how crypto is being liquidity is being increased because of really their online gambling is being facilitated through these coins.
Yeah, look, and I think we've seen innovative technology or gambling tools be wrapped in this facade of innovative technology, right? But if we can just be straight out and admit that, a lot of this just is gambling and be upfront with it, then I think it's a better outcome for the industry. And so what we've seen is gambling tools in crypto being able to generate really a lot of revenue, and that revenue actually coming back to token holders through they'll get the fees and they'll buy back the token, and then they'll burn the supply of that token. So particularly coming back to a protocol called pump.fun, is we've seen don't quote me on the numbers, but something ridiculous. They've been doing a lot of revenue buying back the token and burning it. And it's really interesting. Not financial advice, but they're one of the few protocols actually generating real revenue. That, along with Hyperliquid, are definitely two tokens to keep an eye on for the next 6 months. And potentially, if the market does have a downturn, I'd be looking at obviously Bitcoin and potentially some of these revenue generating protocols as well.
Very interesting.
Cool. Should we leave it there? Is that the end of Global Alpha for this week?
I think there was a lot of information there, particularly towards the end. So we'll leave people to absorb that for the week. And I think we'll meet next week to go through a few more interesting topics.
Yeah, look, it was probably a lot all at once. Look, if you've got any questions about crypto in general, I'm generally a bit of a skeptic with a lot of these broader kind of assets. But if you have any questions, feel free to reach out to the team and you can get in contact with me and we can have a chat.
And anything, US share related, please feel free to contact me, myself as well.
That's right. Nate is the US share genius of the team. So, yeah. All right, we'll leave it there, guys. Thanks so much. Have a great week ahead and good luck in the markets.
Stay safe.